Hello, it's Richard Pears from FinextraTV, and today I'm joined by Mark Gough. Mark is the CEO of the Capitals Coalition, delighted to have you here today with us on Finextra. I saw you recently speaking at one of the conferences and just thought, well, we've got to have you on, so welcome.
Thank you very much. Looking forward to it.
Now, for people that don't know you and the great work that you do, perhaps you could explain to us a little bit who the Capitals Coalition are, what you're trying to achieve.
Yes, so the Capitals Coalition really is a coalition of lots of different organizations around the world that are looking at the concept of value. So what is valuable? How do we get that value into markets, into decisions, into the way that we make decisions, all across a range of different areas. So a very broad group of people. We came together in 2012 originally. There was 40 different approaches to how you might look at natural capital. I'd actually was working in a corporate at the time and had written one of those approaches. And we all sat down and realized that we shouldn't be fighting over the methodology. We should be collaborating on the methodology and fighting over how we deliver it. That's where the real game was. So that was the forming of the coalition. But we really are a global collaboration that's looking to redefine what we mean by value in order to transform the way that decisions are made.
Fantastic. And so, you know, within that construct, can you sort of unpack it a little bit further for us, perhaps as, you know, in terms of the journey that you've been on, what you're doing today to enable things like financial services to make capital allocations, what's happening today, what you think needs to be done to accelerate change?
So apart from trying to bring together the different methodologies, which is where we sort of started as a group, and we do include financial services in businesses within the coalition. We've got governments and regulators. And actually, what we've realized over the last few years particularly is it's got to be a whole system approach. That actually just getting the financial regulators to change what they're doing, I mean, because everyone now has an impact statement or an impact product or an impact, whatever it is. And actually, when we started 2012 or so, no one was using that word. It wasn't, you know, it wasn't common practice. So the conversation has changed quite a bit, actually. Conversation has changed to impacts and dependencies, but it's got to be a whole system approach. So we've got to be able to not just provide the tools and resources that businesses or financial institutions can use, which are growing. You know, there's lots of them out there. There needs to be more consistency with them. But also we've got to make sure that there's a common understanding of value in the regulatory sphere as well, in the way that governments approach this. For example, there is a UN system already that in 2021 that became a standard, but all countries have agreed to start looking at natural capital, and the statistical departments in those countries are actually now capturing that natural capital. One of the best kept secrets out there, I think, at the moment, but that's actually happening. But if that isn't consistent to then what the businesses are doing, what financial markets are doing, we're going to run into trouble. So a lot of the work that we're doing at the moment has been connecting up what businesses do, what finance is doing, and then also through to the governmental and regulatory sphere as well. So I think that's really key at the moment. And I think another thing, just taking it almost a step back, I think everyone in the world, no matter where you are, recognizes that we've got some pretty big challenges, whether it's nature loss, inequality, climate change, all of those things. And the present economic system, particularly since Bretton Woods 80 odd years ago now, in fact, exactly 80 years, 2024 is 80 years ago, that agreement that we came up with there was really based around one capital, which is financial capital. And there's all of these initiatives, these good initiatives that you've been interviewing and you've been talking to, that are doing good things in this space, trying to change the system. None of that's going to work unless we actually address the fundamental core of that system. In the financial sector, we're looking at just one god of being finance. And actually what we need to do is bring in those other elements, the natural capital, the social capital, the human capital. If we bring those in and look at that as an holistic process, rather than what we do at the moment, which is they're invisible, they're hidden on the financial accounts, they're not included in the financial models and the data tools. If we bring them in and make them obvious, then we can no longer hide from those externalities, those challenges that are going on. And really what will happen then is we will be able to make an active decision to destroy the planet if we want to, but let's make an active decision, not just do it because it's a side effect because we're not taking note of it. So for us, it's really important that we're actually building all of those capitals into the financial system. So not just the tools and resources, but actually building it in to the way that the financial system measures value, the way that we reward value, the way that we connect with tools and resources. All of that needs to come together.
So I totally agree, and we love to talk about that. Let's drill down a bit further. First level question is, how do you go about doing this? What's your sort of modus operandi?
So the way of looking at value and bringing in a valuation has been around for many, many, many years. It's not a new concept. So people have been doing it for natural capital, particularly in lots of different ways, particularly water, resources, etc., and things like that. So the problem is that when we look at metrics at the moment, most of those metrics give us 1,000 of this, 1,000 of that, 1,000 tons of carbon. Well, is that good? Is that bad? 1,000 cubic meters of water that I've used. Is that good? Bad? I don't know. 1,000 trees being planted, 1,000,000 trees being planted, 1,000,000,000,000 trees being planted. Are they the right trees? Are they in the right place? What value is really giving that context to it. So what we do is we take that measurement and then we look at the value that could be associated with that measurement. So 1,000 cubic meters of water being used. We ask, well, how many people need that water? Is the water coming from a ground source? Is there enough water? Once you start doing that, you can appropriate a value to that water. And then if I then say that that value in monetary terms or in non-monetary terms, you can do it as a quantified amount, i.e. there's enough water, helps you make a decision, or there's not enough water, helps you make a decision. But actually, if we can start putting monetary terms on that, we can start including that alongside the financial numbers. So we might be able to say that in the case of this water example, that if I said to you in a report, we've used 1,000 cubic meters of water, well, that's not going to tell an investor anything, really. That's just saying, well, they want to compare it against someone else. But if I am able to say that the value of that water in that local ecosystem is going to provide this much value to our business, is going to cost us this much value to our business, then that actually is something that's useful for decision making. It helps the investor, helps the other stakeholders make decisions about whether that decision is the right decision to make. So it's really moving away from, I guess, one of those phrases we often use, if you measure something, you manage it.
Yeah.
That's not true. If you measure something, you get a number. And actually what we're looking at here is moving away from just that number into the context, the understanding. And there's lots of methods that can be used for this. We bring together the community that do this day in, day out. There's lots of technical providers that can come into your company and help you to do this. And lots of the institutions, BNP Paribas Asset Management has hired people specifically to help to do this valuation. They're not just the only one. There's lots of other institutions we're working with. But you can actually start converting that information into something useful for decision making by doing this valuation. So I won't get into all the technical bits, but there's lots of technical providers here that can help with that.
That's brilliant. So when you talk about, one of your goals is to change the math, that's what you're referring to in that terminology, I assume.
Yeah, so the approach that we're taking, change the math, first of all, and we are using Americanization. We're a very global organization, and Americanization, the MTV language fits much better. So change the math, change the conversation. So this is all about how do we engage with people, how do we empower people to do things, and then also changing the rules, the regulations, financial regulations. We've already seen that in the UK with the financial regulator actually putting restrictions on what you can call an impact product. I mean, that is a really interesting step forward. We're seeing other steps in that, but in the change the math, it is really about those tools, resources. How can we make sure that you've actually, know how to do that valuation?
So when you take that forward, I suppose there are many different people with many different methodologies and concepts that they're trying to get into, the way that all of this is done. Let's just put it that way. So you're operating. I saw you obviously at a standards meeting with all of the different people there talking about the regulatory standards, the frameworks, the measurements systems and metrics. Are you operating at both policy, technical, material world? Where's your sphere of activity, and are you doing that through engagement and persuasion, or do you have other levers in your toolbox?
Yeah, great question. So first of all, the coalition, although I've only got a small team, what we're doing is we're working through the organizations that are in the real economy and doing this. So that's why we're a coalition, because actually we've got financial institutions and governments, and we run hubs in local countries. So we're facilitating or curating a movement that is doing the action. So things such as regulators coming up with new approaches will make sure that we're facilitating the right people to influence them. We can bring together a very broad church of different people. So the Value Commission, which we host at the moment, is actually bringing together those that create those values, those that collate them and turn them into numbers that can be used by financial institutions, those that actually use them in businesses and finance, and the regulators. We're bringing all of those together, curating that conversation to come up with internationally accepted standards, because we can bring all of those bodies together. They can be accepted by the markets as something that can be applied. So we're really standardizing those processes, amplifying some of the better bits of it. But there's so many different levers that we need to pull. There's not just one. There's no silver bullet here. You know, if we just got the regulators to work, that isn't going to work. We know that there's, for example, $1.7 trillion worth of perverse subsidies just on the nature subject alone, let alone on affecting people and society. So that $1.7 trillion, no matter what we do, no matter how many frameworks or levers we pull, aren't going to change until we can change some of that. So that's why we need all these different approaches to be able to change the system. There are different ones we're using, if I may. So there's one of them is the digitalization. I think we were potentially going to come to that anyway, but the digitalization of some of this data is going to be key. So how do we make sure that we get the information to people in the right time frame and the right way, and it's tagged properly, particularly with, you mentioned before, there's different methodologies and different tools. So just actually on that, although there's different methodologies, you will find that all of them are using a common taxonomy, a common approach. Most of it is marketing. So when you're talking to your provider and they're coming up to you and saying they've got this brand new tool, to be honest, it's based on the core of what we've been pulling together for many years now, which is a common understanding of what an impact pathway is, a common understanding of what an asset class is. You know, all of that background work is already standardized. So you know, go into it, find the provider that you want to work with, but they're not selling you anything that's different probably from some of the others. What they can bring is their understanding of that tool, their understanding of what they're going to do. That's what they bring into the market. But the digitalization, that is going to be key. And that's one of the projects we've been hosting for the last couple of years, to try and really make sure that all of the different regulatory authorities are able to tag and connect up the information from impacts in the same way. So that actually, if as a user you're putting out information, that information, as it does with financial data already, can go into the market in a consistent way. I think that is one of the levers which is proving very interesting at the moment.
Yeah, absolutely. And you know, we are looking at it from our little bit of work from what's going on in the world of satellite and sensors, all the way through things like, you know, blockchain, digital identity, and digital exchanges of data, so that people can get access to it in the format that they need to do their own jurisdictional reporting. So when you're doing that, are you then taking your expertise and putting that into whatever it may be, TCFD, TNFD language? You know, what do you go to that, or are you generating some alternative that we should be aware of?
So the Natural Capital Protocol was the bringing together of the 40 different approaches that were being used within business at the time. And in 2015, there were only 40 of them being used. So we had different ones by some of the big banks, and we had the UN, but we also had consultants and others. We brought all of them together, and that is the Natural Capital Protocol. That's the baseline that all of this work has built off from. So TNFD, the natural capital bit of it, the Task Force for Nature-Related Financial Disclosures, has that protocol completely and utterly embedded in it already. So if you've applied the Natural Capital Protocol over the last 10 years, you're ready to apply the TNFD, because you've actually already done a lot of that groundwork. And if you're coming new to the TNFD, you're probably going to have to come back and look at that Natural Capital Protocol to help you to deliver on the LEAP model, and it's embedded in that TNFD process. We've got a social and human capital one, which is going into the TISFD, so inequality and social financials disclosures, which is just set up. So there's also that, but actually for us, it's about the integration of all of those. So a lot of the work we're doing now isn't on because TNFD is taking some of that language through into the disclosures market. It isn't necessarily dealing with the decision-making processes and all of that. I mean, assessment is in TNFD, but actually it's looking at a disclosure framework. So there are other elements there. But what we're really focusing on is how do you start to integrate these now? That's why we changed from being just the natural and social and human capital coalitions. We merged them all together to become the capitals coalition. So actually, we're looking at the trade-offs. We're looking at the way that you actually make these decisions in concert with the other issues that are around. Because if you just look at nature, we found, it's just as bad as just looking at finance. If you just look at finance, it's just as bad as, so all of these things, you've got to look at it as a whole. So a lot of our work now is probably 5 years ahead of the market, I would say. I don't think there's many people out there at the moment that are looking at a fully integrated approach. But because we've already, as a community, developed the work for nature, the work for social, et cetera, and all of that, and that's starting to be embedded in, the next question is, how do we integrate it? So we're trying to break some new ground there.
And so the question that one's often hears, and in fact, I raised it when I was in the conference, which is you talk to the financial folks and they say, well, we've got a value at risk model, let's say, that allows us to translate all of these inputs into our portfolio so that we can actually reassess the value of those given these conditions. And the general statement is, we really struggle to be able to make that translation, both either, technically because the system doesn't really do it, but actually conceptually. How do you try and resolve that for people that throw that argument at you?
So there are some organizations, particularly in the financial markets, that are doing quite a lot. UBS recently released a paper at the end of last year really explaining how they're going to try and go about it. So there's lots of organizations in the financial sector that are grappling with this, as you say. It isn't easy. And I think a lot of them are starting with just that measurement piece. So what do you measure? So they're trying to measure those pieces first. Then you can start looking at the impacts that you're going to have, the dependencies. But there isn't, and we've got to be very honest about this. You can't just put in a number into your Bloomberg terminal and just say, okay, it's going to be $10 for every tree, and that's what we're going to put in. It's got to be context driven. That's what we're trying to do, is provide the context to provide better information. So if you're doing work in sub-Saharan Africa, you've got to be looking at studies and scientific evidence from there. You can't just be taking average numbers. Now, that said, average numbers as a starting point are good for heat mapping, for analysis, and a lot of these organizations are using it to say, okay, this is the area I need to focus on. Then they start getting into the detail, and that's when you're going to start needing more resources, and that's sort of where we spend a lot of time helping, introducing providers and others to help those institutions be able to take forward. So we've got a lot of technical and training providers. We've got a lot of consultants and others that that we can recommend to people if they're looking to take that further. Just to be clear, the coalition itself is the facilitation body. We're not going to go in and actually sit down with the entity and help them to do it. But there are ways of doing it. But it is complex, but the payoff is significant. If you're looking at information, this is the question I often ask to CEOs or CFOs, is so if I can get you better information, do you want it? I haven't found anyone yet that said no. No, I don't want it, don't worry. So the information they're basing, significant investment deals, significant processes, insurance, all of this sort of thing, the information they're using at the moment, I would argue isn't sufficient. It isn't allowing them to actually understand the true risks that are in there, because they're not including nature and people and society in it. They're looking at the financials, which is a good proxy for some of that, but they're not including real data there for where this is going to show them risks going several years out, where they're going to be looking at the opportunities. So they're missing out on opportunities, they're missing out on risks because they're not including this information. So yes, it's complex. Yes, you do need to get your head around it. But actually, we deal with complex issues all the time as humans. We can manage this as well. And the payoff of getting better information is going to completely outweigh any of the costs of doing the work.
And final question: is there anybody that you've seen, the sort of everyone really likes to copy somebody that's done it first? Is there anybody out there that's been able to kind of process this complexity and be able to, create a new opportunity based on this value assessment that you've described?
Yes, and there's a growing body of them. So we've had around 50 integrated capitals reports, which is actually integrating all of this over the last year from some corporates. Natura is one of the ones that's been doing a lot of work in that space. Obviously a very purpose-driven organization. There are many others. And what we've done is collected not just from the ones that we've been more actively involved with, but from the whole community. On our website, there's actually a case study database where you can drill down into that. You can sort by country, you can sort by a different application. If you just want to know natural capital, you can look at that. I think the interesting bit with this is the financial markets. So it really did start with the corporates trying to, and in fact, when we had the first meeting of this, we were looking at what was driving them, and we all thought, well, it's going to be because they want to disclose, isn't it? That was the last thing they wanted to do. Yeah. Most of them knew that they had a problem in their supply chain with water in this particular country, and it was a major thorn in the side. It was in every board meeting. They knew they had to deal with it, but they didn't know how. And actually, the majority of people that have come to use this approach are doing it for internal decision making. They're doing it for risk exercises. Yeah. We're now getting to the stage in the maturity of the movement where actually the financial markets are finding this very interesting. The challenge I say with the financial markets is that every financial provider is now starting to come up with their own approach. Yeah. They're starting to look at that. And what we really need to do is help them to see how there can be benefits of doing this in a standardized, consistent way, and let them compete again, like I was saying earlier on, let them compete not on actually, I've got a new methodology, let them compete on actually the services that they can provide and how they work with that rather than on the methodological bits. But I think that that's an interesting maturity of the market that you now get UBS, you now get BNP Paribas Asset Management, you get these others that are stepping into the space that are doing it. One that's doing it across all of the different areas as well, GSK, an interesting one in the pharmaceutical market. They've been looking across all of how they assess, how they make commitments through science-based targets, how they set targets, but also how they then look at the transformations they make and then the disclosures. So across all of those different areas. But like I say, the best place, there's many more of them out there, and I'm hoping in the next year or two, there'll be even more coming that are looking at this space.
Well, listen, you've kind of set it up. We've got to know what the website is. So as I say goodbye and thank you very much for the interview today, and you've really opened my eyes to lots of areas that I wasn't aware of. Tell us two things. Tell us the website and tell us what we can expect from you guys in 2024.
Excellent. So the website is www. Whoops, I've slipped over my tongue then, didn't I? So too many W's.
There's a lot of that there.
Capitalscoalition.org is where you'll find a lot more information about this, and you'll be able to find some of the different entities that are doing the latest work, and the latest press releases, etc. This year, though, I think there's two things that are coming out, and then there's one thing, a pivot we're going to do. The first thing is the integrated capitals protocol. Once again, it's going to be a little bit ahead of some of the market, but you need to start thinking about how you integrate some of this work together. So that framework will be coming out for testing and for consultation over the summer. So that's something to look out for. The second thing is that we've been working with the Value Commission at the moment to come up with the criteria for transparency and confidence in this space. So one of the problems is there's a lot of black boxes out there. You can buy something off the shelf, plug in some numbers and get your results out and put it into your accounts. But the market doesn't know whether that's right. They don't know whether there's confidence in it. So the criteria that you would then associate with that, so every number that you might publish somewhere, you can actually now, in the same way with financial numbers, you have financial notes, we're writing those notes for value statements. So those will be coming out this year as well. You'll be able to see that work. There'll be more advancing on that. So that's really important to start getting some transparency and confidence in the market. Finally, we actually need to pivot what we're doing. So we're coming to the end of the second phase of our strategy as a community, and we're now looking at three different things. We're looking at quality, first of all. So how do we get the assurance audit, building on that Value Commission work? How do we get that into play? So that's going to be really important in the next phase. How can we make sure, instead of saying, what do I do? We start saying, am I doing something that's good enough? That's what we're moving to. The second piece is empowerment. There's not enough people with the skills, the knowledge to be able to do this work. We're working a lot with the accountancy profession. Accountants have many of the skills to move numbers around, but do they actually have the knowledge to be able to bring in these numbers? So that empowerment of people to act and the narrative associated with that is going to be key. The third bit is there's already existing systems, whether it's the regulators, whether it's the stock exchanges, etc. All of those systems, we're working very closely now with them to make sure they're bringing in a consistent understanding of value. So how do we make sure that we're connecting up the system, the present existing system, to use things that they should be using already, to make sure that they're accounting for everything and not just for the financial numbers. So that's all to come in the next year.
Well, a tour de force, and looks like there's more to come as well. So we'll definitely be coming back to this. So for now, Mark, Gough, thank you very much indeed.
Thank you.